share with us, a little bit about you, what got you started in this multifamily, and then especially what had you started, what had you decided to start a fund? Thanks.
Multifamily, like, my wife and I, we did 200 flips or so. I mean, maybe a little bit less at the time when this whole thought process has been going through my head. But I've been watching other folks, some friends of mine, mutual friends, people go up and go into different asset classes: multifamily, short-term rentals, self-storage, mobile home parks, um, private money lending, just various things. And most of them got started in single family, and I'm over here laser focused on house flipping. And then my wife and I, we kind of realized, like, hey, this house flipping thing, yeah, it's kind of cool, but it's a job now. Like, it's a job, and there's nothing passive about it. Like, the moment we stop doing the activity, we stop getting the results from the activity, i.e., money. So we must keep doing that. And there's nothing wrong with that, but it really wasn't why we got in real estate to begin with. We got into real estate to build wealth and passive income. And house flipping was not that solution. It was the solution to help me quit my job and go full time. I achieved that, but that was many years before. And here we are. We built this like house flipping machine. Like, so what do we do? So we started winding down the house flipping and moving over into more buy and holds. It was originally single family, and then having more conversations with folks that have gone into other asset classes, and just really the bug was there, but we still were focused on single family. Just that's what I knew. And it really came down to a point to where COVID happened. I decided, hey, look, I'm just going to shut off this whole flipping thing altogether. We'll just hold. Those have been our best deals anyway. And then it was just kind of like perfect storm of events where we're no longer flipping. We know where we want to go in the long-term hold. And then a buddy of ours, it was in a mastermind. At the most recent mastermind, he said, house flipping has made me millions. I'm thankful. And I'm shutting my business down. And then he went on to say everything that my wife and I were thinking, that it was a job. It wasn't building wealth outside of just the cash per deal. There was no long-term value of the business. And he was moving everything over into multifamily and self-storage units. He was doing both of those. And we were like, wow. And then it was probably about 12 months after that, that same guy had a deal, a very good deal that came across our desk, or he brought it to us. He was like, hey, look, we're doing this deal. Do you want to come along with us? And meanwhile, our private lenders, we were churning their money 3 or 4 times a year in house flipping. We just in and out, in and out, in and out. They're making lots of money. Now we're not. And they're like, hey, when's your next deal? I'm like, well, I'm just not buying as many houses. But we had this deal. We had this opportunity. It was 387 units, something like that, 380 units in Daytona Beach, Florida. And it was Class B, and it was a repositioning play. And the operator had 40 years of experience, and they owned 1,000
Huh?
units locally. And then we had the opportunity to come in 50-50 with them on this deal that they already owned. It was just
Wow.
repositioning capital. I'm like, all right, well, I don't have to worry about them being new and making newbie mistakes. They'd been in business for 40 years. I trust the guy who brought me the deal. So his money is in it, his partner's money's in it. And then at the same time, like I'm looking for something new. And then my investors are also looking to keep their money to work. So all these little things kind of came into play. Started a fund. It was the first, it was a fund of a fund structure, worked out really well. We had a lot of tailwinds too with the market too. So that added some cherries on top of the deal. And that was our first one. It went really well, and it gave the clarity on where we wanted to go forward, which is where we're at now.
Wow. And how long ago was that?
That investment was 2020, and then it
Okay.
was a 5-year plan. It lasted 18 months, or maybe 16 months. So we achieved 5 years of results in 18 months. Again, that's just market
Nice.
tailwinds. We didn't do anything special there.
Right.
It was a good deal when we bought it. It would have been a good deal had we held it. It just became an amazing deal just because of the market tailwinds. Take it. Like, when that happens, take it. Don't bet on that, but definitely take it. So we did.
That's awesome. Yeah. And then, so that was an SPV fund. And now you're doing a traditional fund, correct?
Yeah,
So
it's
share with us.
Well, it's a little different than what you see normally. So I had to go back out and like, hey, look, if I'm going to do this, how am I going to add value? Like, I don't want to do the same. I don't necessarily want to do the same thing that everybody's doing.
Hmm.
I used to ask this when I was, heavy into house flipping. I was like, raise your hand if you can offer all cash and close in 7 days. Like everyone's hands going up. And I was like, all right, how are you different? How are any of you different when you're talking to a seller? Like everyone can offer that. Like differentiate yourself. So how am I going to approach the marketplace a little bit differently? Do I want to go out and find these deals? Like there are people who've got even newer folks in the market, they've got 5, 7, 10+ years experience with
Hmm.
broker relations on me. Do I want to go into that? Maybe not. I can do that, but I don't want that to be my differentiator. Do I want to go in and be the property manager? Hard no. Like definitely don't want to do that. I'm not a construction guy, but I have raised 19 million over the years, and I've got a perfect track record with my capital partners, both private money lenders and equity partners over the years. I was like, well, why don't I combine my experience with that and also asset management and planning, and also in some circumstances, boots on the ground, observation and due diligence. So that's what I pieced together with an open-ended fund that looks and feels a lot like a REIT, what you would see with a traditional REIT, but it's still private equity. It's 506C. So we can provide our investors with consistency, with a consistent blended investment portfolio, a risk-adjusted blended
Ve-
investment portfolio targeting workforce housing.